Welcome to this video. Today we're going to do a deep dive stock analysis in Alibaba, and we're going to talk about Alibaba's $53 billion AI bet that they announced a few months ago and how that is working out right now. And we're going to talk about the upcoming earnings. And eventually we're going to ask the question whether this is the last opportunity to buy Baba. So without any further ado, let's get started. So we're now looking at the Alibaba charts on TradingView, and we can see it's right now trading at $124. And if we look at the charts, we see that the 50 EMA is above the 200 EMA. And we're now looking at daily candles, and this looks to a uptrend to me. So this year, Alibaba has been very bullish, and it's up 50% year to date. And the earnings are coming in a few days on 29 August, and they will release before the US markets open. A few months ago, Alibaba announced around February that they would invest $53 billion in AI. And now in this article, it talks about that Alibaba's risky $53 billion AI bet faces make or break moment because earnings are coming soon. We are now living in a AI gold rush, and the innovators are all fighting for market share in the AI business, like Google, Microsoft, Apple. Suddenly they are all competitors, and Alibaba is now also competing in this. So this is very competitive business, but we are in a gold rush. But the question is whether they can make it or not. So that's why the earnings are really important that are coming in the next few days. And here it says Chinese e-commerce powerhouse Alibaba finds itself at a crucial crossroad as investors prepare for what could be a defining moment in the company's ambitious pivot toward artificial intelligence and cloud computing dominance. So this massive business, e-commerce business, is now pivoting to AI and cloud computing because that's the future. This graph, you can see that here is Qwen, which is basically from Alibaba, their AI bot, and this is DeepSeek, and this is ChatGPT 4.5. And you can see that Qwen is still underperforming under most categories, but they are pretty close to the strongest chatbots like ChatGPT and DeepSeek. So they're doing well, and maybe in the future they can even surpass, but they are not on the highest level yet at the moment. So Alibaba is heavily investing in AI, and some analysts say that this is very risky, and that some investors don't like it because they're spending a lot of money in something that they're not 100% sure of if they're going to win in this AI gold rush and whether they're going to make money in AI. But this gamble is not really a gamble if Alibaba has a strong economic moat. An economic moat is what protects it from competition, and it doesn't have a dominant position in the marketplace. So let's find out its economic moat, and we can see here that Alibaba has a wide moat. So they are pretty strong. So Alibaba has built a wide moat driven by marketplace, network effect, brand strength, skill, integrated services. They are one of the largest e-commerce companies based on gross merchandise value, and they're doing actually pretty well. But in AI, they're not the most dominant right now but that is their potential future growth factor. And here we can see the strength and risks. And but because this has a strong economic moat, this company, it's not so risky to invest heavily in AI. Now we are going to answer the question whether Alibaba is cheap, because it's important that we have a margin of safety, so we are sure that we're buying low as an investment. And if we look at the PE ratio, we can see that it's right now historically low at 16.85. A few months ago it was even lower at 12, but if you look at history, it's definitely below the average. And that's great as investors, but because that gives us a margin of safety. If we're going to use a discounted cash flow method by using Warren Buffett's owner earnings, and we're using an 8.44% growth rate based on what we can see here on Finviz, 8.44%, which is pretty defensive, but it is now almost a defensive stock. But so if it only grows for 8% for the next 5 years, and then it halves for 15 years, and we use a discount rate of 5%, we come out of an intrinsic value of $348 billion. So it's 20% undervalued. And based on this conservative method of this discounted cash flow method, we have a true value per share of $150.96. We're now looking at the charts, and we're looking at weekly candles on trading view. And Alibaba is now trading at $124. And we just calculated that the intrinsic value is $150, right? So it's now undervalued and the earnings are coming soon. So the question is whether this is the last opportunity to buy. Well, you can see that there is a golden cross even on weekly candles and that the trend has changed. So in the last year, Alibaba has been extremely bullish, making lower lows and higher highs. And if the earnings gap up like a lot higher, then yeah, you cannot buy at 124 anymore. Of course, it can also drop, but buying right now will give you a margin of safety because it has a strong economic mode and it's undervalued. So even if they lose a little bit of money in their investment in AI, I think in the long term it will play out well. Daily candles, you can see that the 50 is also above the 200, and this is a uptrend, and we are now up 49% year to date. So I expect more bullishness for this business in the next few years. I hope you like this video. I hope you learned something, and feel free to subscribe for more videos. See you in the next one.